Ready to step up your investing journey? Invest in global companies using your Philippine pesos. Make it happen with the Sun Life Prosperity World Equity Index Feeder Fund, the latest offering from Sun Life Asset Management. This new product is a feeder fund that invests in a target fund. The target fund tracks the performance of the MSCI All Country World Index, which represents more than 2,000 leading companies across developed and emerging markets. Sun Life Prosperity World Equity Index Feeder Fund will enable you to invest in a fund that matches your long-term horizon, capitalize on stocks in developed and emerging markets, diversify your investment portfolio, enjoy potentially high returns, and get closer to your long-term financial goals. All with the help of professional fund managers and the support of the largest non-bank asset management company in the country. Set your eyes on the world with the Sun Life Prosperity World Equity Index Feeder Fund, your ticket to global markets. Connect with us now to learn more about it. Only from Sun Life Asset Management.
Good afternoon. May I invite everyone to kindly pause for a while as we start this event with a short prayer. Let us put ourselves in the presence of God. Almighty and ever-loving God, we praise you, we glorify you, and give thanks for all your blessings. We pray for the success of this webinar. Please bless the speakers, our partners, and guests. May it be another channel for us to learn new things and help make a difference in the lives of other people. May we continue to be living witnesses of your love, protection, and guidance. Always keep us and our loved ones safe and healthy. All this we ask in the name of Jesus Christ, our Lord and Savior. Amen. Okay, good afternoon, everyone. Welcome to today's exclusive webinar entitled Global Investing in Times of Uncertainties, brought to you by Ramfrey Financials in partnership with Sun Life Asset Management Company, Inc., or SLAMCI. This is Kim Sayo from Ramfrey Financials, and I will be your host for today. Kamusta po kayo mga ka-RFF? Were you able to join our webinar last week? I hope so. It was indeed one of the most interesting discussions we've had since it tackled explanations on the JP Morgan downgrade, inflation, Russia-Ukraine crisis, and the impact on the market of the controversial election result. In case you missed it and would like to watch, no worries, because you may visit our YouTube channel, Ramfrey Financials, as we have posted a replay of part 1 of the event already. We highly recommend you check it out, as it has a lot of important insights that can help you. And after last week's informative discussion on local equities, many are wondering if it's better to invest in global markets at this time, or it is also as problematic and volatile. Since we got a lot of inquiries asking about global investments, we again thought about organizing this special event so we could share with you our views and thoughts about it. So we have invited 3 financial experts who will explain what is really happening in the global markets, as well as share with us what we could expect given different factors. And just like before, there will also be a special Q&A session to follow immediately after their presentations. So please feel free to drop in your questions in the Q&A box found below your screens, and we will try to answer them live later on. And to make things more exciting, SLAMCI will be giving away 5 200 pesos EGC voucher during the program. So please stay tuned, as you may be one of our lucky winners. Let's sit back, and to introduce, or known as Jake, is the Global Funds Manager for the Global Funds portfolio of SLAMCI. His previous work experience includes stints as investment manager at JG Summit Holdings and JG Digital Equity Ventures, fund manager and investment analyst in BDO Trust and Investments. Jake has a master's degree in business administration from the Asian Institute of Management and an international relations degree from the Universidad Complutense de Madrid. So friends, without further ado, let's give a warm round of applause to Sun Life Asset Management Company Inc.'s Global Funds Portfolio Manager, Mr. Joaquin Velus. Hi, Sir Joaquin. Good afternoon.
Hi, good afternoon, Kim. Thanks for having me here, and looking forward to telling you about what's been happening in the global markets. There's been a lot of different events that have moved and that have driven the markets as of late. And I know a lot of you are itching to understand what opportunities there might be in the next month and in years to come. And I've prepared a short presentation to walk you through these market events. So let me just briefly run through what we will be talking about. I've broken down my presentation into 3 parts. One is a look back of what happened in 2021. It's a very it's a year that where we saw double-digit gains in most equity markets. Secondly, I want to give you an investment thesis of why it is important for us to diversify and invest offshore. Last part of the presentation would be reserved for our recommendations and where we see the global equity markets moving forward, and of course some time for question and answer if there's any. So to start, we saw global equities last year continue their strong performance. The yellow bars show the 1-year total return in USD terms of the different equity markets. The blue bars are 5-year returns. Just by eyeballing the figures, we see that last year was a very good year for equities. In almost all markets, at least in the developed markets, returned double-digit returns. The US returned 29%, Europe 17%. But of course, among the developed markets, there were still laggards. Japan did not do as well, returning -4%. And 2021, we can say, is a story of reopening. Coming from the COVID-19 pandemic, which wreaked havoc on economies, restricted mobility, and forced governments to implement economic restrictions. We saw the world. The world was little by little adapting and starting to reopen. Last year, vaccinations were getting ramped up, and people at least were restarting their lives. On the monetary policy front, we saw central banks continue to be very aggressive, espousing ultra-loose monetary policy. They employed stimulated the economy through quantitative easing, buying of bonds, interest rate cuts, reserve requirement cuts to keep financial conditions easy and encourage economic actors to invest and borrow. On the fiscal side, governments continued to borrow heavily to finance their COVID response and economic recovery. What this resulted to is a wider deficit and higher debt levels across the globe. The result of this aggressive monetary and fiscal policy is a sharp rebound in demand and a sharp recovery. And this is very evident in the economic recovery and the economic growth posted, especially in the developed markets. There's been some disparity between EMs, the emerging markets, and and the developed markets, mainly because of the more aggressive monetary and fiscal stance, as well as a more coordinated COVID response, uh, which allowed governments to reopen their economies faster and thus recover economic growth faster. Next slide. So for this year, there are several market catalysts that we've been monitoring. And I think one of the most important ones is policy uncertainty, or policy monetary policy. And what is driving monetary policy? You've probably been reading about headlines of 40-year highs in inflation across major markets in the US and Europe. And this is brought about mainly by supply side disruptions, supply chain bottlenecks. In China, we're familiar of their very strict zero COVID response strategy, which resulted into plant closures, delays in expansion, leading to bottlenecks, and of course, supply shortages. Inflation has been broad-based, especially in the developed markets, with increases coming from both food and non-food items, from housing to healthcare, cars, etc. So this unusually high inflation, especially coming from a period of low inflation, 2010 to before the pandemic, inflation was benign. Inflation was soft. And so in some ways, we are entering a new phase. And this spike in inflation has led the Federal Reserve, or to become more aggressive in dialing back the monetary policy that they have implemented. The tightening has resulted into higher rates, rather, has resulted, at least this year, into more fund flows going back to the US and making the US dollar stronger. Next slide, please. So another driver of inflation is commodity prices, and more evidently, oil and gas prices. Now, a lot of us, when we go to the pump to gas up our cars, that's when we feel this increase. But mind you, this increase didn't just start when the war in Ukraine happened. Even before the geopolitical tensions in Ukraine erupted, oil and natural gas have already been steadily climbing. That's because, as I've mentioned on the previous slide, the economic recovery has been gaining full steam. If you note, both natural gas and oil rallied triple digit from 2020 to 2021. Year-to-date figures, still quite strong. For natural gas, around 30%, and for oil, 40%. This increase in oil prices is very important because this feeds into other items in the inflation basket. The food that we consume, the utilities that we pay for, a lot of these components of the CPI are driven by oil. And so this is guidepost that we look at to have a sense of whether or not we feel that inflation has already peaked or not. Next slide. I've already briefly touched on Ukraine and Russia, and admittedly, being in investments, we are not the best people to ask whether or not um, the war in Ukraine will end anytime soon. We leave it up to the politicians and the historians to be the judge of those. What we do study is how wars or how these geopolitical events affect returns, affect asset prices. And what we've noticed in past episodes of war, that there is knee jerk drawdown, a knee jerk movement downward. But if you move past that, after 3 months, 6 months, 12 months time after that event occurred, we observed that returns of the S&P 500 have recovered and even surpassed where they were at the start. Out of these 12 military events on screen that I'm sharing, 50% of the time S&P delivered positive returns over the 12-month period right after that geopolitical event happened. So the main message that I'd like to drive at here is that these short-term uncertainties could affect the markets in the short term. But if you look at it on a longer term basis, there's a good probability that equity markets would recover 6-12 months down the road after that brief sell down that occurs. Next slide, please. Again, I've briefly touched on inflation, but inflation in the US. In Europe, they're slightly more exposed to higher inflation just because they're closer. They have more links to Russia and Ukraine with respect to their oil consumption. The oil supply of the Europe primarily comes from Russia. And so to a large degree, they are dependent on Russian oil for their heating, transport. What Europe is exposed to is a possible downturn in consumption and a softening of consumer sentiment if ever oil continues to go up and the taps on the Russian pipeline leading to Europe gets closed, then Europe would need to source oil elsewhere. And they would have to do so at more expensive prices, leading to higher prices, which again could possibly eat up into consumer wallets and would cause consumers to spend less. And so in terms of vulnerability, Europe is more vulnerable to oil and to the war compared to other developed markets like the US. Next slide. Given that backdrop on the geopolitical risks, on higher inflation and uncertainty in monetary policy, where do we feel the opportunity lies still? And this slide describes that we're more leaning towards developed markets still, most especially the US, because of its low exposure to the war, at the same time of higher savings rates and savings cushion, which they had previously given to their citizens in the form of stimulus checks. They were giving stimulus checks, and so a lot of the stimulus checks, although the consumer has spent some of this already, there is still some savings cushion that they can take out whenever they would, and that still can keep the economy afloat and keep consumption afloat. On the other hand, EMs, especially their CPIs, are more exposed to higher oil prices because a lot of their bulk of their CPI baskets are spent on food and energy. At the same time, these emerging markets have lower savings. At the same time, governments have not spent as much on fiscal stimulus. And so the EM consumer, they have not benefited from the stimulus tailwinds and the stronger job markets that their DM counterparts have enjoyed. Next slide, please. Yes, and so which leads me back to another potential market catalyst. We've seen several variants come, and a lot of the times the economy has reopened and then closed back again, reopened and closed back. The equity markets have reacted very in a knee-jerk kind of way by reacting on these outbreaks and on these flare-ups. What we did want to look at is how past episodes of health crisis have affected markets. And again, in line with our observation from the different geopolitical events, viral outbreaks cause, while they might be damaging to the economy and while they might hurt sentiment in the short term, in the longer term, what we've noticed is that the economy and the markets have recovered on a 6-month, 12-month horizon and have even surpassed where they were pre the health crisis. And on average, the S&P 500 has returned around 36% after that episode of outbreak was recorded. Next slide. So given those different market drivers, we take a step back and we look at the different global equity market returns over the past decade. And these returns are the ones on top are the ones that have returned the highest for the year. And what you've noticed is that returns, the one who topped these returns are not a specific market each year. No single market has topped equity performance consistently in the past decade. You see the US topping 4 times. You see China there twice. But what this mean that it's hard to bet on a single market with your entire portfolio. What we do try to do is we try to look at areas that offer significant growth potential, earnings growth potential. At the same time, look at the valuations, where value is, which markets are trading cheaper than other markets. So in the past decade, the US has returned 15%, while the laggard is ASEAN that has returned 2%. So if you had invested on a 50-50 portfolio of the highest returning market and the lowest returning market, you'd still return almost 15% if you had stayed invested during these periods. And another observation would be the outperformers do not consistently come from the developed markets or the emerging markets. These markets, they are not synchronous in their market cycles, and so some other markets would be growing faster than other market in certain periods, just because their governments are doing something different, or their the private sector is investing consistently. So growth is not equal and at the same time in all markets, and thus it is an advantage to stay invested in multiple markets through, of course, the Sun Life Voyager Mutual Fund. Next slide, please. So I see some people requesting to make requesting my presentation to be a bit more Taglish daw. Sige, I'll do my best. So after telling you about kung ano yung what happened in the past, what happened, and what are the possible drivers of the market this year, let me tell you about the reasons of why you need to invest in the Sun Life Prosperity Funds, most especially the Voyager Fund. It's a global equity fund that invests in several funds. So the number one reason why you need to invest in such a fund is behavior and bias. We, as Filipinos, we have an implicit bias on our local market. When you invest, you think of the PSEI, you think of SM, Ayala, but there's a whole other world offshore that we need to be cognizant of. Dapat natin maintindihan, meron ding mga companies, meron ding mga markets na pwede nating paglagyan ng pera. And sometimes yung mga companies in other markets, mas maganda pa yung growth potential niya. Kaya niyang magdala ng bigger dividends, kaya niyang magdala ng higher earnings potential. So yung chart to your right says that hindi lang sa Pilipinas yung equity home bias na yan. In other countries, ang tendency is for them to invest also in their home market. 67% of AUM in Japan invest in the Japanese market, while 26% of the AUM in the UK invest in UK companies. The Philippines were quite small, so very small percentages invested offshore, and that is because we have considerations on access. Walang masyadong offshore products available to us. Hindi tayo familiar with the types of products. Hindi natin alam kung paano mag-invest. So what we're trying to do is we're trying to educate people and make investment products like this, the World Voyager Fund, available to you guys at an accessible price and at a very accessible to everyone. So next slide. Again, I've mentioned during the previous slide, hindi lang sa PSE tayo merong opportunity to invest. There is a whole other bigger investable universe out there. So this chart shows you gaano kalaki yung mga different stock exchanges by market capitalization. Of course, you see the top two, yung US stock exchanges, the New York Stock Exchange, NASDAQ, S&P 500. We also have Asian stock exchanges there. And if you look at the global equity benchmark, MSCI All Country World Index, which we benchmark ourselves on. Yung Philippines is actually just less than 1%. So by putting your money in the Philippines, by putting your investable assets in the Philippines, you are practically underweighting all of these available indices. You are setting aside your resources that you could have invested in these markets. So again, why do you invest in these markets? Greater access to companies which have products and services that are widely used by people everywhere. So it pays to invest in markets such as in markets offshore. Next slide, please. Of course, our goal as investors is to create a portfolio that would be an all-weather portfolio, meaning whether bumagsak yung market, umakyat yung market, it would deliver consistent returns year in and year out. And how do we do that? We look at correlations. Ang correlation is one asset and another asset. Pag umakyat yung isang asset, yung asset B, not necessarily aakyat siya with that asset. Bakit importante na yung portfolio mo is uncorrelated? Because it's important to be diversified kasi you don't want your all of your assets in your portfolio going down at the same being sold down or reducing in value at the same time. You want to be able to achieve and deliver consistent positive returns year in and year out. And we do that by looking at the country correlations. Yung Japanese fund ba namin, correlated ba siya with Europe or mas correlated siya with Taiwan? So we mix and match depending on those correlations. So again, volatility. Again, this is just a slide which shows volatility. In order to reduce volatility in our portfolio, what we do is we create a portfolio that is uncorrelated. Putting your putting your entire portfolio on just the MSCI Asia X Japan would give you a volatility of 21 versus putting some in MSCI Asia X Japan and putting another portion in a lower vol market, the UK or S&P 500 would reduce your volatility. Bakit importante to reduce your volatility? Of course, in periods like we are in now, wherein there is a deep drawdown na you see the all country world index losing 20% or in bear market, almost in bear market territory. You want to be able to sleep well at night. You want to be able to not worry about whether or not the portfolio value or your hard-earned money will lose value. So doing diversifying cushions the possibility of your portfolio experiencing high volatility. Next slide, please. And aside from looking at volatility, we also look at growth and earnings. So aside from minimizing risk, you also want to maximize return. And how do you maximize return? You look at markets that grows faster than how it used to grow before. Of course, you compare the different markets. You compare North America, Europe, EMs, which market is growing faster and which market is growing above trend. From those types of the answers to those types of questions would be important in deciding how much to allocate to Europe, how much to allocate to North America. So what we've noticed on the past decade is that at the start 2020 to 2000 to 2020, we saw emerging markets almost double or more than double yung growth of of developed markets of the US. But more recently, the US and Europe have been catching up. And still, EMs have grown at around 5%. But if you've noticed on the table, you see North America growing from 1.6 to 2.84. And hence, that this is one of the reasons why we prefer developed markets, most especially the US. It's because they're projected to grow faster than before. So, next slide, please. This and with that higher growth clip, you would expect their underlying companies to grow faster as well. The blue bars indicate earnings growth is how much the companies in their index are growing on a year-on-year basis. The earnings growth of UK and China stand out compared to the other markets. But we also looked at not just the growth of each market in a vacuum. We also looked at how fast they are growing compared with how they grew before. Because China might be growing at 20%, which is quite good already. But they've grown at a faster clip in the past. So, and we used Z-scores for that. Next slide, please. After looking at which markets have companies that are growing faster, we also look at how expensive or cheap they are. Because, of course, most of the time, you have to pay for growth with higher multiples. So this chart shows you the price to earnings multiple of the different markets. What you want to look at is markets that have high EPS growth but low PE multiple. So just by eyeballing this chart, you'd see the most expensive markets are the US, India. The Philippines ranks there at around 17 times. At the same time, we also just don't look at the multiple per se. We look at how the multiple has evolved. Is the multiple compressing? Bumababa ba yung multiple? Is the multiple expanding? Tumataas ba yung multiple? And what that means? Is it because the market is getting riskier? Or less riskier, I mean, if it expands? Or maybe the market is factoring a possible acceleration in earnings growth. Yun po yung mga bagay na tinitingnan namin. So we look at EPS growth and we look at how cheap or expensive the market is. And from then, we'd come to an investment decision of which markets are merit an overweight or an overweight allocation, a neutral allocation, or an underweight allocation. Next slide, please. And by giving you a taste of how it is, of our thought process and why you should invest offshore, let me share with you how we do things, at least in the Sun Life World Voyager Fund. We have a 3-step process. We do have an asset allocation decision that we make, and we have a scorecard, a proprietary scorecard, which we rate monthly, which grades a whole host of factors: fundamental, technical, sentiment, valuation. And from there, we'd come to a decision. Dapat ba naming i-underweight yung equities? Dapat ba naming i-overweight yung equities? In being a top-down investor, we make bets also on the country. Quarterly, we do rate each market that we cover. And we cover the US, we cover individual European countries, we cover Asia ex Japan, we cover China, India, all of the major markets. And we rate their attractiveness based on, again, another set of factors: the economy, the government, monetary and fiscal policy, labor market, valuation of their major indices, and other factors which may not be captured by the fundamentals. Sentiment on the market, potential geopolitical risk, currency risk, etc. So we come up with a country score, which we use to give an allocation to each market. Should we overweight the US? By how much? And that would depend on the score. And the third step would be fund selection. We have developed a fund selection system by which we rate the top funds per each type of per each style, per each type of fund. For example, we've gone through more than 500 funds, and we've rated them based on a set of criteria that we've set: returns, Sharpe ratios, information ratios, expense ratios, volatility. So what you're getting by investing into Voyager is you're getting the best funds for each outlet, for each market, and for each style based on our rating system. That's how we manage the World Voyager Fund, and we do this consistently on a year-round basis. Next slide. Okay, now that I've gone through a brief narrative of what happened in the market and some flavor on how we manage the fund, let me give you a summary of where we intend to how we intend to manage this fund. So at the start of the year, we were bracing for the new normal. We believe that the world wouldn't go back to how it was, and so there would be certain winners, companies which have evolved, companies which benefit from these consumption and behavioral changes. And so, but we were cognizant of the fact that the inflation was rising, and that with inflation rising, markets would that the central banks would tighten policy. In order to control inflation, kailangan nilang taasan yung interest rates. And so that reality made us anticipate that markets would correct, and multiples would contract. At the start of the year, we also liked Europe a lot. And actually, it was one of our preferred markets before the start of the war. But it got affected, and so we scaled back our position there because it had a disproportionate skew towards value. value style, yung mga companies which have cash flows that are um, which which have consistent cash flows and predictable cash flows. So right now we have slightly changed our strategy. We still like developed markets, but we're skewed more towards the US and Japan. The US, the growth still remains strong. Admittedly, inflation is still moving higher, or inflation is still um, making highs, but we're confident that the economy would remain robust and that earnings would hold up. Japan, on the other hand, is just coming out of the lockdowns, just restarting their economy. Out of all of the developed markets, their monetary policy is the easiest, or they're still pump priming the economy. So that is a positive for equities. What else have we been doing? Last April, we made a conscious decision to underweight the equity exposure because of, again, of negative of sentiment turning poor, turning sour, and that has worked to us. That has worked to our advantage. We're also reducing the risk of the portfolio, going away from the growth outlets, reducing our growth exposure. Companies that tech companies, or those companies that have earnings way into the future. So we're cutting all of those riskier companies and moving closer to beta outlets, those which are closer to the index, reducing tracking error. So that's what we've been doing, and we've shored up a bit more cash than how we were used to managing the portfolio. So we have a bit more cash that we were ready to deploy once we feel that the market has bottomed out. Those are the steps that we've taken to at least weather the volatility in the global equity markets, and we're we're confident that after this brief period of volatility has passed, then global markets would continue moving higher. That's it. Thank you very much for listening, and I look forward to hearing your questions and inputs. Thank you very much.
Thank you very much for the very informative discussion, Sir Joaquin. We have a lot of attendees who are investors of Sun Life, Voyager, and Wave, so I'm sure they're happy to hear how the SLAMCI funds are strategically positioned in consideration of recent global market developments. And to talk about SLAMCI's global funds further, we have also invited the broker channel specialist of SLAMCI. Friends, let's all welcome Ms. Lercy Cuenca. Hi, Ms. Lercy.
Hello, good afternoon, Kim. Thank you
Afternoon.
everyone for spending your Tuesday afternoon with us. So looking back into Jake's presentation, we found that there are opportunities in the global markets, considering the current market developments. So I am here to highlight two of our global funds in SLAMCI for those who would like to start investing in the global markets. So these two funds can be your ticket to global markets, the World Equity Index Feeder Fund and the World Voyager Fund. So first is the World Equity Index Feeder Fund, or WAFE. So this fund is the most recently introduced fund of SLAMCI. It was launched last 2020, but in just 2 years, the AUM of this fund has already grown into more than 3 billion pesos. So that's a testament of how this fund has captured the interest of our clients. So WAVE is an equity fund that aims to track the performance of the MSCI ACWI. It is a feeder fund that invests at least 90% of its assets in a target fund. And WAVE is peso denominated. No? That's why this has been also the favorite of RAVWare clients. It allows investors to use their Philippine pesos to access the global markets. Now I've mentioned that WAVE tracks the performance of the MSCI All Country World Index, or MSCI ACWI. And for the benefit of those who have just heard MSCI ACWI for the first time, here I am showing a map where the stocks of the MSCI ACWI can be found. As you can see here, US has the biggest weight, more than half of the index at 60.26%. Followed by Canada and then China, and the other countries that you can see here. So MSCI ACWI covers more than 2,000 securities and consists of more than 40 country indices, of which approximately half are in developed and half are in emerging markets. So in short, MSCI ACWI is an index designed to provide a broad measure of the equity performance throughout the world, and WAVE mirrors the performance of this index. Now I'm showing here the fund fact sheet of WAVE. This is downloadable from the Sun Life website. If you look at the investment mix, you'll see that as of April, the fund 97.15% of WAVE is invested in its target fund that tracks the performance of the MSCI ACWI. But what I would like to highlight as a benefit of investing in WAVE would be the global diversification. This has been repeatedly discussed by Jake a while ago. So if here in the Philippines, of course, we have our local PSEI, that is invested only in one country, of course, the Philippines. So in WAVE, it is invested in more than 40 countries across the world. And if in PSEI, that is invested in the top 30 companies, WAVE, on the other hand, is invested in more than 2,000 securities. That's the reason why we call WAVE a basket of all stars. So you'll see here famous names like Apple, Microsoft, Google, Unilever, Toyota. So this popular brands that we use on a day-to-day basis. So WAVE actually gives us access, access to invest in these securities around the world. So for those who would like to start entering the global markets using your Philippine pesos, we have a good news because starting last month, we have lowered the minimum investment for WAVE. Before, you can invest with an initial investment amount of 50,000 pesos. Now you can start investing for as low as 10,000 pesos, and the additional investment amount is just 1,000 pesos. So I would just like to reiterate that WAVE is a passively managed fund. And in this management style, the fund manager attempts to mimic or to mirror the performance of a benchmark, in this case, the MSCI ACWI. Now, if you'd like to, of course, allocate a portion of your portfolio into an actively managed fund, we invite you to also check out our World Voyager Fund. So in this fund, you are investing in diversified equity securities across different geographic regions. So World Voyager Fund is structured as a fund of funds. And again, it is actively managed, so it is unconstrained into a specific region or a sector, and it allows investors to benefit from various opportunities in the global equity market. So WAVE is peso denominated, but World Voyager is dollar denominated. So I can see here in the chat box, a lot of viewers coming from other countries. So if you do have your extra US dollars, no, you can try investing in the World Voyager Fund. So I've mentioned a while ago about fund of funds, no, but what is it exactly? So World Voyager is a fund of funds, so it means that it is invested in other different mutual funds. So if we compare this, of course, you are familiar, diba, with equity funds, and equity funds are invested in different stocks. So on the other hand, World Voyager is invested naman in different mutual funds. So the advantage of this structure is that it is very flexible. And so the fund manager can go overweight on a region, country, or asset class that might perform better. I'm showing here the fund fact sheet of World Voyager. And since it's a fund of funds, no, you can see here the top 5 offshore mutual fund holdings under the World Voyager Fund. So you'll see well-respected mutual fund names in the industry like JP Morgan, Schroders, Franklin Templeton, and the others. So World Voyager invests, no, in the mutual funds of these companies. And if you're asking how do we do that, how do we choose the mutual funds where to invest in, we have our partner office, no, in Canada, the IIC, who helps us filter the mutual funds available in the market to choose the best of the best funds to invest in. So just to also share, if you are planning to invest directly in the funds that you see here, you might need to be a qualified buyer or have an offshore broker to be able to access these funds. But World Voyager allows you access now with just a minimum initial investment. So aside from global diversification, what I'd like to highlight as a benefit of investing in WAVE or World Voyager is sector allocation. So if we break down, no, the sectors of the PSEI, we'll see sectors like financials, consumer discretionary, industrials, and the others. No? But what's missing would be some sectors like information technology, healthcare, and materials. No? And these sectors are present in the MSCI ACWI, no? Which is the benchmark of WAVE and World Voyager. So investing in these funds would not just diversify your investments in different countries, but also in sectors that are unavailable locally. So this fund Microsoft, Google, and Facebook. So for those who would like to start investing, no, using your dollars in the World Voyager Fund, the initial investment for this fund is just $500. Before it was $1,000. And just last month, same with WAVE, we lowered it to $500. Additional investment is just $100. So let me wrap up my presentation by leaving you with the advantages of investing in WAVE and World Voyager. So first, of course, these two funds will allow you to invest and capitalize in stocks of companies in developed and emerging markets. Second, it will allow access to sectors that are unavailable locally. And lastly, of course, these funds will allow you to diversify your investments globally for long-term growth. So if you'd like to know more about WAVE and World Voyager, please just message Rampver, no? Their friendly advisors will address your inquiries regarding this funds. So thank you again. Thank you for inviting us.
Thank you so much, Lercy, for that interesting talk and to share with you some key takeaways from Jake's and Lercy's presentation we have here. Eurozone equities value a clear regional preference. While the US market is being affected by Fed's tightening and soaring inflation, Sun Life is constructive in Eurozone, given this region's reasonable valuation as compared to other developed markets. And lastly, we have financial markets usually react to geopolitical risk, but historically, equity markets have tended to recover within 3 to 12 months of the event. So we can say that in every crisis, there is a recovery. And again, thank you so much for your time, Jake and Lercy. Also reminding everyone to please feel free to drop in your questions for our speakers at our Q&A box so they can answer them live afterwards. And okay, so to introduce our last speaker, he's the lead independent director of two listed companies, Globe Telecom and Ayala Land Logistics Holdings Corporation, and an independent director of two other listed firms, Ayala Land and the National Reinsurance Corporation of the Philippines. He's also chairman of Singapore Life, a director of Escort Financing, the Culinan Group, Technomarine Philippines, Seven Tall Trees Events Company, and Mobile Group Inc. He's a member of Brother Bo Sanchez's mastermind group and is cited by many as one of the best leadership, business strategy, investments, marketing, and sales speakers in the country today. He's the author of two books, Trailblazing Success and Firing on All Cylinders, which are both certified national bestsellers. Finally, he's the president and CEO of Ramfre Financials. Friends, join me in welcoming the Mr. Rex Mendoza. Hi, boss.
Hi, Kim. Good afternoon. Good afternoon, everyone. Again, an honor and a privilege to have all of you in this webinar this afternoon. First of all, Kim, I need to thank both Jake and Lercy. Alam niyo po, ito yung pinakamaganda sa pagkakaroon ng mga partners. We have to profess the fact that we're not going to be good in everything that we're supposed to do. There are times when there are other people who are better. And if other people are better, might as well partner with them and let them add on to us the muscle that we need to navigate international and global investing. This I say because it's a real concern. To be able to be a global investor, there is a requirement. You have to be on the ground. You have to know and understand the data that gets sifted through almost on an hourly, not daily, hourly basis. So kung hindi po tayo nakabantay, paano tayo mag-i-invest internationally? Unang-una, wala tayo doon. Pangalawa, we don't have access to the information. And before you know it, you're probably being forced to meet up with risks that you might not want to have. So talagang I'm thankful that Jake and Lercy were with us this afternoon, and obviously they're gonna be back to answer questions later on, your questions. Pero talagang, let me start with that. I'm really grateful that at Ramver we have them as partners because let's face it, Sun Life is one of the foremost international firms that would be dealing with this space of global investments. They are in many places, they have people on the ground, and pag may mangyayari po at may balita, I am so sure sila ang isa sa unang makakasagap. Because let's face it, we only have a few thousand pesos, maybe some of us have a few millions, pero syempre si Sun Life, paano mo lalabanan? Billion-billion ng hawak niyan na pwedeng i-invest. So much so that I can really say they have the economies of scale. And that's the reason why they have the great personalities like Jake and Lercy, and maybe thousands of other people in this space on the ground in each particular market around the world. So ang job ko po is to somehow put in a capsulized version what we will have to contend with what we have heard from both Lercy and Jake, no? Kasi po, syempre, sa amin, we are going to be focusing on what we call the real implementation and execution. We don't want to deal with the investment process itself because, again, this is not local investing. This is global and international investing. We'd rather have someone else deal with the intricacies of that, and we get to focus on what we need to do best, which is to do our asset allocation, make sure that we have the right mindset and the right attitude and behavior towards money management. So let me tell you the real anchor for all that has been said. On our end, the real anchor is this: the fact that we have to achieve financial objectives regardless of the situation. Wala pong dahilan kung masamang ekonomiya ng Pilipinas, hindi naman magbabago retirement age mo. Hindi naman magbabago yung edad na mag-aaral ang anak mo. Your goals have to be within a certain timeline and you cannot postpone them. Hindi mo pwedeng sabihin na, saka ko na papaaralin ng anak ko pag maganda ng economy. Hindi pwede. We will have to achieve what our objectives are regardless of the situation. And if we cannot achieve it totally within the local market, we will have to go to international markets to get the results that we have to. Second, focus on goals will change perspectives. Kasi po, pag nakatutok tayo sa economy, binabantayan natin ang nangyayari sa ekonomiya, medyo tatamaan po ang ating emosyon. And when you get to use emotions in driving your investment processes, investment decisions, delikado po yan. Mas maganda, we stay focused on our goals kasi pag nakafocus kayo sa inyong goals, guess what? You will have more clarity as to your time horizon. You're going to be having more clarity when it comes to focusing on your risk appetite and more important, personal and controllable stuff like this. And lastly, discipline and strategy will always be the success drivers. Whatever happens to an economy, whatever happens to an environment, this is something that I've always said many, many times. We can never control the weather, but we control our ship. Diba? Tayo po ang magdadala ng ating bangka. Tayo ang mag-a-adjust ng ating timon. We will always adjust the sails no matter how the wind is blowing. We have to reach point A to point B no matter how the wind is performing. So ganun din po sa investments. Kailangan pa rin tayong makabili ng ating dream house, ang ating talagang fabled dream vacation. And we should be able to retire within the lifestyle that we want. And we also have to educate our children or maybe start the business that we've dreamt of. We cannot get into excuses just because the economy is performing as of a particular way. Because that's already a given. Ito po talagang sabi namin sa Ramper Financials, paulit-ulit, management and optimization in the arena of investments has become more difficult and challenging. Really difficult. Why? Again, complexity. Ang dami pong tinatawag na decision factors na involved. Doon pa lang sa shinare ni Jake kanina, di ba? Gusto ko na sanang sabihin sa sarili ko, hindi ko na iintindihin yan, bahala na muna kayo. What I will focus on will be the way I will be managing myself and my goals and my investment journey. Yung detalye na saan mag-i-invest, anong ekonomiya ang babawi, who's going to be stronger, Europe, Japan, the US, I will give it to the people who take this as a full-time job. Because complexity is not something I'd want to deal with at this day and age. Second, there would really be volatility. Nakita naman natin yan. Yung tinatawag nating black swan. Hindi na nga black swan eh. Kasi almost every year and even more than twice or thrice a given year, lumalabas na sila. So there are rapid and unexpected challenges. And certainly there is uncertainty. There is a lot of unknowns that we know. Alam niyo, magkaiba yun ha. Yung alam mo na may unknown, hindi mo siya naintindihan, pero alam mo nandyan siya. Iba po yung ambiguity. Ambiguity is you don't even know what you don't know. That is so much of a blind spot. That's going to be very, very different. You don't even know what you don't know. And because of that, how are you going to navigate? How are you going to, manage this? Alam niyo po, ang kalaban ng VUCA, ang katapat niyan, is expertise and experience. Expertise and experience, the knowledge of markets. Hindi pa nga po perfect yun eh. Kahit mismong yung fund managers nahihirapan tayo pa kaya? So kailangan po naisip natin, we will have to navigate this with the help of people we can partner with so that ganito na lang po, no? Yung sinasabi ko, to each his own, to each his best. If I'm going to be managing my cash flow better, I'll manage my cash flow. But if someone can manage the way I will invest it, then I'll probably pass that on because it's easier to pass that than to deal with that. So as we see this, nakita natin kanina yung may chart na pinakita si Jake. Ano? I call that a heat map. Pero ang pinakita ni Jake is the globe. Ako po, isisingit ko dito sa heat map na ito, yung Pilipinas. Now, Philippine equity will be your dark blue and the light blue will be Philippine fixed income. Okay? So tingnan nyo, nasa ng Pilipinas dyan? Di ba? Many times between 2006 and 2014, nasa top tier, top performer. Di ba? Pero in the last 3 to 4 years, abay nasa ilalim po siya. So, first of all, it is clear that there is no asset class that consistently outperforms. Kung hindi, doon na lang tayong lahat. Hindi ba? Pero since palipat-lipat nga, certain economies, certain markets perform in different ways at different times, it is incumbent upon us to participate and make sure we are part of the growing economies and we lower our exposure to the not so growing economies. Pero pinakamadali siguro is, ilagay na natin yung sarili natin doon sa babakas na lang tayo sa the big boys para sila nang bahalang tumingin sa lahat ng yan. And our job is basically to work on our base, to work on our investment portfolio. And as we diversify, we get the best of the best. I can say that. Yung po ang role natin asset allocation. Kasi tinatanong kong marami, ba't ka ba talaga nag-i-invest? Do you invest to make more money? Or do you invest to achieve financial goals? I think for many of us who understand investing, we know what the answer is. If you invest to make more money, maliligaw po tayo dyan. Mawawala po tayo sa landas. Bakit? You will always run after yields and you will be forgetting risks and you will be second-guessing based on goals. Pinaka-focus po tayo dapat sa goals at yung goals ang magdadala ng investment horizon at ng risk profile natin na dapat nakamatch. In fact, we should be doing asset allocation in a very, very progressive and dynamic way. Asset allocation is when we invest in different asset classes. Iba-iba po, time deposits, stocks, bonds, managed funds, real estate, insurance, and even cash. And not only that, hindi lang different asset classes, dapat different markets din. Kasi alam niyo po, yung performance ng assets na ito in different markets change. And they're not going to be the same. So pinaka-importante po, pag medyo meron kang naiiwan, meron kang umaabante. We have to build a portfolio that balances risk and rewards based on our risk tolerance, investment horizons, and goals and objectives. Our risk profile and our time horizon will be a great determinant of our goals. At, sorry po, i-refute ko lang yung napakahihilig mag-trade dyan. Wala akong anything against you. If you can handle it really well, fine. I go for it because I've done that in my younger life. Alam niyo po, ayoko namang sabihin na huwag niyong gawin yung ginawa ko. No, there were times when I did very well. But as I've said, the complexity of today's markets put me in a situation where I cannot deal with it in the same way. Plus, there are so many things I've been doing. Sa introduction pa lang po ni Kim kanina, nakita niyo naman how much time I have to devote to all of those roles. So, since hindi ako pwedeng tumutok sa market, what do? I let other people manage my portfolio. I manage the allocation, they manage the particulars. And let me tell you, I realized this after so many years. Maybe a little too late. Wala naman palang hinahatid na dagdag masyado. Yung security selection, yung market timing, yung other factors. I-total po natin ang impact ng lahat ng yan, may less than 10%. 91% is driven by asset allocation. So what am I telling you? All the headache, lahat ng sakit ng ulo, lahat ng focus, yung pala, ang makukuha mo extra 9% lang. The real driver is asset allocation. So if much of long-term portfolio performance is driven by asset allocation, at alam natin na pag properly asset allocated ka, hindi sasakit ang ulo mo, bay dapat po pala, gano'n na lang. Ano? Siguro kung maaga-aga kong nalaman ito, palagay ko mas marami akong buhok ngayon. I'm really sorry for that, but I really had to share that with you. Kasi po, pag diversified ka, okay, you lower your overall standard deviation. Your portfolio will have typical asset classes that react differently in different markets. So tama yung sinasabi ni Jay kanina, meron kang challenged, getting into difficult times, meron ka rin namang umaakyat at medyo coming up with a recovery. So cycles are different around the world and cycles are very different between asset classes. You will have to get away from putting your eggs in one basket. Everything in the portfolio does not go up together. Everything in the portfolio doesn't go down together either. At dahil po dito, meron tayong tinatawag na downside protection. Kahit papano po, hindi ka basta-basta lulubog. Hindi ka concentrated when it comes to risk. Pero tatapatin ko kayo, ganun din naman yan pagdating sa upside. Kasi syempre, diversified ka, hindi ka all in. So pag umaakyat din yung asset class na ganun, hindi ka completely participating there. But say, I have to share this with you and very, very important principle that I hold close dear to my heart. The fact that you take care of the downside, the upside will take care of itself. Kasi po, pag minsan, masyado ko naghahabol sa upside at hindi ko nakita yung downside, yun po ang magwa-wipe out sa atin. So mas mabuti pang i-limit ko yung downside kahit limited yung upside, but at the very least, over the long term, my upside is set. And with diversification comes discipline. Alam nyo, human nature typically forces us to question strategies that aren't working. Nag-invest ka, bumaba. Bakit mali yata ang ginagawa ko? 4 years na ako, 5 years na ako, lugi pa rin ako. Alam nyo po, from 1997 to 2002, didn't we go through the same phase? 5 years of almost nothing until something happened in 92 where we, in 2002 where we started flying. But in 1997 till 2002, we were at the doldrums. And sure enough, ito, yung cycle na ito, yung 2014 hanggang ngayon, parang walang nangyayari. Ang tagal na. Ganyan po talaga eh. You know, the Taipans, they know how to deal with this. They just continuously invest. And they make bets in the market when markets are down. Unfortunately, the common people, kami pong mga tinatawag na, di ba? Insulares at peninsulares, di ba? Tayo yung natatakot. Tayo yung pag may masamang nangyayari, tatakbo na tayo kagad. Sila, sinasalubong nila yan. Tuloy-tuloy lang sila. And over the years, that's the reason why they have conglomerates and they are Taipans. They just don't divest because markets are wrong. Their patience is built in their strategy and discipline. There has to be faith in time-tested long-term strategies because they do work. You have to have the patience for it. It does work. This minimizes the impact of emotions, most especially when the news and the media sensationalize most ups and downs of the market. So what do we have to do? What do we have to do? The must-dos of times of uncertainty and volatility, the must-dos for investors at this particular time of volatility, uncertainty, complexity, and ambiguity. First and foremost, manage your emotions. Do not panic. Do not panic. Manage your emotions. When you're managing your emotions, it's easier to manage your portfolio. You are not colored by fear or greed. Next, keep your sights on your goals. eventually yan pa rin po ang mga magdadala ng ating disiplina, ng ating strategiya. It's very important that we know we're investing to achieve goals, and the goals will have to be the beacon that has to, that has to guide us towards a particular direction. And certainly, dapat po alam natin ang nangyayari. And let me thank you for being here today because quite frankly, alam nyo na nandito kayo para makasagap kayo ng impormasyon, the facts, taking out the cloud of emotions, taking out, posturing. This is real talk because what Jake and Lucy showed you are hard numbers. Hindi po yan haka-haka. They are all factual. They are more anchored market information that we have to heed. Hindi po yan yung chismisan, mga marites na magtutulak lang ng kaba sa marami sa atin. Be well informed. And lagi po naming sinasabi, we at Ramper Financials would like to be partners for you. We'd like to be partners for you and we'd like to be able to guide you through this financial journey. Again, kami po ang partner nyo. Bigyan nyo po kami ng pagkakataon. Give us that opportunity to guide you. Give us the leeway and the the real backup of our mission and purpose. Kasi po yan naman ang talagang gusto naming gawin. And then let's evaluate our portfolio regularly. Let us review. Tama ba po ang takbo niyan? May kailangan bang baguhin? Sobra bang concentrated sa isang market? You will have to do that. And then lastly, please be ready to seize opportunities. Great value surface during the worst times, during the bad times. Alam niyo po yung sinasabi ni Lucy at ni Jake are three very important things that we have to keep in mind. Three very important things. Obviously, yung number one nila, clear na clear, is diversification. Diversification gives us the opportunity to participate in markets na, alam niyo po, nung panahon ko, kailangan milyon-milyon para maka-invest ka abroad. Milyon-milyon. Now they have made it affordable. Now I think the word is democratized. Saan ka nakakita? 10,000? Global portfolio? Nung panahon ko po, 10,000. Wala ka mabibili nun. Kahit concentrated risk, ni hindi ka makakapag-invest because no international broker will attend to you if you only have 10,000. And then lastly, the chance to be able to participate in markets. Can you imagine that you're investing in the United States, you're investing in the names? Yung pinakita lang ni Lucy na slide na may mga logo? Wow! Years ago, we took a lot of pride in saying we've invested in Jollibee, we've invested in Ayala Land, we've invested in, great companies, S&M, all of that. E ngayon po, hindi na ganun lang, di ba? Hopefully, we can also be proud enough to be investors that we can consider global. Di ba? Yung meron ka sa Amazon, meron ka ring investment sa Facebook, yung ganun ba? So it's very different and it really ushers us in to a more, anchored and robust and dynamic investing. So what are my tips for strategic portfolio management? You have to watch your cash flows. Mahirap naman po yung mga ngailangan tayo at pag nangailangan tayo, kailangan nating magbenta ng ating mga posisyon. No, let us not put ourselves in a precarious position. Kahit po nag-i-invest tayo, dapat secure na secure ang ating emergency funds. Hindi tayo dapat mangailangan to the point na magbebenta tayo ng investment to create cash flows. The worst time to invest and divest is when you need money. The best time to divest is when you don't need the money, which means you're just divesting because it's the right move. So it's very important that we have the right cash flows and emergency funds. Ample enough emergency funds to weather any storm. Second, adequacy of security and protection. You know, it's not an accident that I'm saying this because Sun Life is our partner. Pero alam nyo naman po, sila rin ang #1 insurance company. Dapat secure din tayo sa ating mga coverages. Alam din natin na for anything that can happen, we have something that our loved ones would be better off having during real times of difficulty, just in case we won't be around to guide them towards the future. And then let's review our asset allocation parameters. Are we in the right markets? Or concentrated market ba tayo? Nasa Pilipinas lang ba tayo nakataya? Or international ang ating taya? Para po doon sa wala pang international exposure, please contemplate on having that. And I guess it's very clear that Sun Life or SLAMCI, their funds would be one of our best options. They're practically the top performers in this market. Next, asset class exposure. Siyempre po, hindi naman lagi dapat stocks and mutual funds. Tayo ba po ay may enough na fixed income? Tayo ba po ay meron ding mga tinatawag na, real assets like real estate, maybe some of us, commodities. Kailangan po medyo diversified din as to asset class. How about industry and sector exposure? Na-mention ni Jake, may issue sa inflation, may issue sa rising interest rates. Just by saying that, there are sectors and industries that will be hit badly by those factors. But there are industries and sectors that will do well because of those factors. Tayo ba ay nakalipat o nakabalanse man lang towards having exposure on the industries and sectors that will do well in this particular kind of landscape? And lastly, currency exposure. Sabi ni Lercy, kung meron kayong dollars, ayan ang World Voyager. Hindi ganun lang. Alam nyo, ipupush ko kayo more than Lercy has pushed this. Kung wala kayong dollar, kung wala kayong stronger currency, okay? Just make sure you have new exposure to those. Ibang-iba pa rin po. Let's just face it. Maybe about 2-3 years ago, we thought the Philippines has the strong peso or a strong currency. That is temporary. Technically, because of our size, because of our revenues, we will always have a weaker currency. So exposure to more internationally accepted stronger currencies would be a must. So I will, probably advise some of you to have at the very least dollar exposure. Para po kahit papano merong gang stronger currency hold sa iyong portfolio. Peso or dollar cost averaging, yung tuloy-tuloy na pag-i-invest, it works. But they work very well if you are in the right investments. Most recently, hindi ko na po tinatimingan ng market. They know this. Even in Voyager, even in WAIF, tuloy-tuloy lang po ang paglalagay ko if I will have the extra funds that I can set aside for the next 3 to 5 years. I manage myself. I don't manage the money. I let other people manage the money to take out the headache that I don't want to handle myself. And why is that? Because this whole thing is about managing risks, not returns. At a time of volatility, uncertainty, complexity, and ambiguity, ang minamanage po natin downside. If you manage the downside, the upside will take care of itself. Again, thank you po for being with us in this webinar this afternoon. And as always, I put this as my last slide, always anchor everything on what truly matters. In the end, it's all about people special to us, our family, our loved ones, people who are special to our hearts. Eventually, we do what we do for all of them. And that's the reason why I'd want you to focus on our goals for them, not simply on the money you'll make by investing. With that, you're going to be in the right pathway and you will be succeeding in a much better clip than what other people encounter when they're dealing with this VUCA world. Maraming salamat po sa inyong lahat. and blessings always.
Wow, thank you for such an insightful and encouraging talk, Boss Rex. It really gave us powerful realizations and lessons to ponder on. And to summarize some important highlights from Boss Rex's presentation, here are our key takeaways. First is, we have to achieve financial dreams regardless of the environment. And asset allocation is a must in today's VUCA world. Different asset classes perform differently in different markets. And it is important to diversify and stay disciplined in investing. And lastly, it will pay to have dynamic partners in effectively navigating the world of global investments. And again, thank you so much, Boss Rex. So at this point, may we now request our three guest speakers to please open your videos as we now move on to our question and answer portion. And as mentioned earlier, we have chosen the most interesting questions in our Q&A box, and these will all be answered live by our three speakers. And we have here first question. This is for Boss Rex. Sir Rex, so this is from anonymous attendee no naman tayo. Sir Rex, given the current situation around the world and the dip in US stocks, is it best to invest in world funds now for the long term? And personally, how do you manage your portfolio during these times? Are you more heavy on global or in local?
Okay, those are two big questions there, no? But let me say this in a very straightforward way. You really increase your commitment to investing in a particular market when it is down, right? I mean, people were very open to investing in the US about 2 years ago or even early last year because it was, on an all-time high. Actually, that's practical. I'm not going to say it's a wrong thing to do if you're regularly investing. That's okay. But I just highlight the fact that since you're getting things at a bargain today, you're in a better position to invest today. And when I say, I put together my exposure, syempre naturally, my Philippine exposure is still higher. It's not the other way around. Kasi syempre nandito pa rin tayo. Eventually, if there is a need that I'll have, it's still gonna be in pesos. But over the years, this international portfolio as a part of my total portfolio has been increasing. It has been increasing more because of opportunities, more because of concerns regarding the local scene. But, as I say that, hindi ibig sabihin na lumalaki yung international dahil I'm shifting my money outside because I don't have a sense of confidence for the Philippine economy. Now, it doesn't mean that. I'm just saying that as an investor, I think it's the more important thing. It's the more prudent thing to do.
Thank you for that answer, Boss Rex. And we have here a question for Jake. This is from Jose Luis Chua. So question is, we've seen global markets declining recently. When are you expecting the global market and your fund's performance to stabilize? Moreover, is the US heading for a recession this 2022?
Again, those are two, just to recap, those are two questions. When do I see the performance of our funds stabilize, and then if I see a recession in the US? Siguro the first questions, the long and short answers, of course, it's hard to pinpoint a bottom. Ang hirap po. I've been managing money and looking at the financial markets for a while, and if we knew where the bottom was, then ang galing namin, and then we'd go on and generate really, really good returns for everyone. But we don't. And so what we do look out for are some guideposts. Ano ba yung pwedeng signs na baka nag-bottom out na yung market? And we look at inflation in the US for us is one major guidepost. Right now, consistent pa rin yung pag-angat ng inflation. And what that tells us, pag consistent pa rin yung pagtaas ng inflation, yung monetary policy, yung kailangan itaas ng interest rate ng Fed po natin, kailangan mas aggressive pa sila. So we haven't seen that peak. Once we see that peak, that will probably be a sign. We were also looking at earnings of companies in the US. Because with with margin compression, kapag po mataas ang inflation, ang tendency po ng mga margins ng mga kumpanya natin ay lumiit. But hindi pa natin to nakikita with the US companies. And so if that margin becomes more resilient, kapag hindi po siya lumiit, then that would be a good sign that, you know, we have bottomed out already. And also that is a sign na if there's going to be recession or not in the US. If margins of companies, if revenue growth of companies hold up, that would be a sign that, you know, we might not actually even hit recession. Again, right now, our group it is not the base view. Hindi po yun yung lahat kami in agreement that there would be a recession in the US, because the fundamentals of the economy remain strong. Consumer spending remains strong, the company's earnings growth remains strong, and so hindi po siya widely accepted. But we're monitoring the increasing probability of recession in the US.
Again, thank you for that, Jake. And we have here another question. This one is for both Jake and Boss Rex. Sabi dito, since 'di ba lahat o marami din sa mga Filipinos ngayon are exposed into cryptos. So the question is, good afternoon, may we know your thoughts on cryptos? Would you recommend investing in Bitcoin? And what particular industries in the USA would do well in the next few months? Is it better to focus our investments in our local market rather than diversify into the international markets? So I think Jake can answer first before Boss Rex on that.
Personally, I don't invest in things I can't value, and I don't invest in things which derive its value from how much other people are willing to pay for that asset. And so I don't have any experience in crypto. I've seen people trade crypto, and since we're investments, I have friends who are into crypto, but it's not, the volatility is not for me. Masyado pong magalaw ang daily fluctuations ng prices. And so I don't invest into crypto. With respect to having allocation towards more global investments, that was the second part of the question, right? Tama ba? I think so, yeah. We always advocate a balanced portfolio, a well-diversified portfolio. And I think in both my presentation and kay Boss Rex, palagi naming sinasabi na do not put your allocation, your eggs into a single market, because hindi sila sabay-sabay ng pagtaas at pagbaba. And so what you want to do is kapag may bumababa, hindi ka overexposed dun sa bumababa. I-shift mo yung allocation mo dun sa mas maganda yung growth potential or umaangat. Yun po yung ginagawa natin sa Wave. That's why we look at the different markets, how fast they are growing, what is how expensive they are, because actively managed siya, pwede naming bawasan kung saan tingin namin na markets na overvalued, and then dagdagan dun sa markets namin na overvalued. And similarly, in your portfolios, we do advocate a more balanced approach wherein may allocation kayo sa global, may allocation kayo sa local. And ina-adjust nyo na lang depending on how confident you are with one market versus the other.
Thank you, Jake. And Boss?
Kim, I'd like Lercy to answer that as well. Alam ko may probable views din si Lercy. I'd like the three of us to have our own flavor on that question. Lercy, if you may, please.
Okay, Boss Rex. So as for SLAMCI, if I may also share, cryptocurrency is not yet considered as an asset class by the regulator of mutual funds, which is the SEC. So as such, in Sun Life, we are not yet in any time soon investing in cryptos. But I am also no personally I'm an investor in cryptocurrency, no. So if you are planning to invest in Bitcoin, no, of course, considering its very volatile nature, as mentioned by Jake, please do study it, no, 10 times, and again, never invest in something that you don't understand.
Agree.
Mhm.
Well said, Lercy.
Mhm.
Maraming salamat. That's the reason why I wanted Lercy to chime in because, you know, it's very important that people take on a company view and a personal view. So dun mo makikita kay Lercy, company view, it's a no-no because Sun Life has to deal with assets that are, defined as asset classes that are acceptable risk-wise, right? But she's saying she's investing on her own. So siguro, syempre, pareho kami ni Lercy. We're quite frankly a bit on the distribution side so we can be a little more involved, no? Pero ako, gusto ko yung sagot din ni Jake kasi Jake is a fund manager. And I have a lot of respect for fund managers who will say they'd rather avoid certain investments because they are not a believer of that. Lalo-lalo na, meron siyang inahawakan eh. Parang ang hirap nun, ano? You're going to get conflicted because you believe that this is an asset class that you are managing and you're managing for other people. And then you have other distractions. So talagang, again, sorry to say this, but Jake doesn't have probably the kind of leeway that Lercy and I will have. And I respect him for that. Kailangan importante ganun. Mas gusto ko yung fund manager na hindi nakataya sa lahat ng bagay. Kasi pwedeng kami yun. Like I will say, I invest in cryptocurrency. But it's probably less than 1% of my total portfolio. But again, Kim, 1% of my total portfolio is big. Okay,
Yeah.
malaki na rin yun. Pero it's because I want to understand the space. I cannot be an influencer. I cannot be a mentor for a lot of people if I get asked and I say, I don't understand. So I study it. Now, much like Lercy, as I study it, alam mo, importante sa aking rule, ang hirap mag-aral pag wala kang taya eh. Alam mo yun? Pag wala kang exposure, there is no driver to learn that space. You have to have exposure. Parang kahit papano, sorry to say this, but kahit anong laro, you have to be invested to be able to, hindi ka pwedeng nasa isang sulok lang, parang you're just observing. You won't be able to understand it unless you have something at stake. There has to be what I call skin in the game. And that's the reason why I ventured into investing in it. But much like many other investors I know, nag-crypto kami pero nandun lang kami sa mga malalaki, di ba? Bitcoin, ADA, the big ones. But even those big ones are not safe with the experience that we had with Luna recently, yung Terra Luna, di ba? So talagang eye-opener for a lot of people. But again, as I've said, it is alam mo yun, pareho kami ni Lercy, we're getting into it, eyes wide open. Hindi ito yung pag nalugi ako dito, maglulupasay ako or hindi ganun. Parang it's, basically something that I would often say tuition fee, di ba? Tuition fee yan, just in case I'd really want to understand it. But again, it's the new world. It's the world of the young people. I might be on the older set, but it doesn't mean that I cannot understand it. So I'm studying and I'm putting a bit of skin in the game, but still, ito lagi ko sinasabi sa marami using the classic age-old principles of investing. Diba? Kahit naka-invest ako sa crypto, nandyan pa rin yung prinsipyo ng investing. It's always risk return, asset allocation, and making sure that you know what you're doing.
Thank you for elaborating that to us, boss, especially for those people that who don't understand it first, but then they want to involve themselves in that asset classes of our investments. And we have here actually questions since a lot of our attendees today are actually invested in both Voyager and for the Wave. So we have here a question for Ms. Lercy. So considering the volatility of the global markets, what is your recommendation on how we should approach global investing? What should be our strategy for both funds?
Okay, no. So Kim, there are a lot of uncertainties currently in the market, and so I would suggest that the attendees would take this as an opportunity. No, it's time to make staggered entries into the market. So again, staggered entries. No, so pwede sila mag-invest in tranches muna rather than investing their money all at once. And also, my recommendation for them is to start as soon as possible. For them to take advantage of the current discount, no, as mentioned by Jake, no, current discount in some markets. And also, lastly, no, this is important. You have to dedicate your investments in your global equity funds for your long-term financial goals. Now, considering the nature of these assets, these are equities. So these are meant to be kept for the long haul.
Thank you. Thank you for that, Ms. Lercy. And we have here question from Mishina Base. This is for Jake. Is there also a need to look at the currency exchange rate when investing using Philippine money? To look at the market and the exchange rate. So yeah, basically the market and the exchange rate.
Well, if you're a peso investor and most of your needs are in peso, then of course it would be beneficial to you if the currency if peso is appreciating. Conversely, US dollar is depreciating. But since nga we set aside a chunk of your portfolio for dollar investments, and later on a smaller to start with, a smaller portion of it in dollars, then it would be disadvantageous lang once you convert that back into peso and the peso appreciates. But if not, if you keep it in dollars, after all, you can use it for your dollar needs. If you go travel, if you have other needs in dollars, then I don't see it being a disadvantage. So the only disadvantage is if later on you decide to convert it back into peso, and the peso is much stronger than what you've initially converted it back to at the start in dollar.
Thank you. Thank you for that, Jake. And since we have a lot of investors here who really have a lot of concern about the global market, and actually this question is for three of you. I think Ms. Lercy can chime into that as well. No. So this one, what's the worst case scenario that can happen to our market with the election sentiments in local, but for the global, we have the Russia-Ukraine war, rising prices of commodities, and interest rates. So I think Jake can answer that first since he is our fund manager here. So yeah.
Yeah, I think a lot of tawag namin tail risk, a lot of the unforeseen events have happened already. I mean, the war is a black swan. 40-year high inflation is again another event that hasn't occurred in a long time. And so I think a lot of the negative news ay na price in na, kumbaga dinigest na ng market at nai-reflect na yan into prices. What is the worst thing that could happen? Probably a recession in the US is another event that we're closely monitoring. That could, because right now our base case is that there would still be growth in the US, and then the US companies would still grow at a healthy pace. But since nga, and hindi pa rin to nagre-reflect into, a lot of it is more of investors anticipating that there would be recession because nga of the inflation, but we haven't seen it in the numbers yet. And as you know, markets move advance palagi yan, palaging nauuna. And so kaya pinoposition na ng mga investors yung in anticipation of that potential US recession. That could probably be the worst. Kaya we're seeing also a slide in the major indices, yung S&P 500 and Nasdaq the Nasdaq is in bear territory. S&P is approaching bear territory. But to answer your question, I think that's the risk that we're still monitoring. But aside from that, I think the worst has happened already. A lot of tail risk have materialized and have been priced in already. So that's it.
Thank you, Jay. Ms. Lucy, you want to add before Boss Rex could share his thoughts on it?
All right. So Jake answered about the worst case scenario, no. But what I would like to highlight, no, for the benefit of the audience would be, even if we have this headwinds in the global equity scheme, no, our investments team, no, still sees earnings growth, no, for some of those companies. And with that, no, even with that dovish, no, market outlook, we are still seeing MSCI ACWI to return around 6 to 8% for this year. So that's what I would like to highlight, that there is still room for growth, no, for this year, despite those headwinds, no, mentioned by Jake. So those news, no, those the sentiments of the market should not stop everyone from allocating a portion of their portfolio in global equities, because again, this investment vehicle is meant for the long term.
Thank you, Ms. Lucy. Boss.
Kim, for me, it's always a cycle. Markets always go through cycles, and it's very important that we acknowledge where we are in that part of the cycle. As Jake and Lucy mentioned very aptly, that many events have actually transpired, and most of these have already been discounted. This is the reality amongst markets. Sometimes things would have happened that the market has already imputed in prices before people even acknowledge they happen. And that's the reason why, if you remember, we came up with a video regarding the elections. And people are saying, kaya bumagsak yung market dahil sa elections. We're refuting that because the results of the elections have been discounted by the fund managers even months before the election itself, because the numbers in the surveys didn't change. Hindi naman as hopeful ang fund manager na numbers are gonna be tilting the other way. Hindi ganyan. Medyo analytical sila and they deal with the science. Pero syempre, tayo ng mga ordinary mortals, gagamit tayo ng emotion, gagamit tayo ng hope and prayer na obviously hindi nangyari. So sila, na-impute na nila yon. So ganun din ang global markets. In fact, what we should be waiting for, and it's very, very near. Ako, ewan ko kung agree si Jake, pero sa akin kasi, hinahintay mo yung capitulation eh. Nandyan na yung despondency, nandyan na yung despair. So ano ibig sabihin? In the cycle, malapit-lapit ka na. So pwede na akong tumaya kasi hindi na yan malayo dito. When it gets to capitulation and it goes back and puts that curve together, that means my downside is very, very thin, right? So I'd rather put money now. Alam ko baka pwede pang bumaba. That's a possibility. Pero hindi na yan malayo. Kaysa yung mag-iintay ako pag umakyat na naman siya. Tapos dun sa optimism and euphoria, dun ako maglalagay ng pera. Mali, di ba? I think we use this quote many times. No, this is a quote by Sir John Templeton, right? Bull markets are born on pessimism, right? They actually grow on skepticism. They actually rise on optimism and they die on euphoria. So, kailangan maintindihan natin, tama si Jake, tama si Lucy, kailangan medyo ahead of the curve tayo. Pag naiwan tayo sa curve, pagkikitaan tayo, hindi tayong kikita.
Thank you for that, Boss Rex. And we have here another question from our dear attendee. Sabi niya, if I am a conservative investor, this one's for Boss Rex, who still wants to make a position in global equities, if I will invest in both Voyager and WAF funds, where should I put more funds in? And I think Ms. Lucy can chime in on that as well.
Yeah, I guess for me, the World Equity Index is, for me, less in terms of volatility and the fact that it's all around the world, medyo mas balansyado siya, no? But, I won't even look at it that way. I will invest in WAF and I will invest in Voyager, and I will do the allocation vis-a-vis my entire portfolio. Not against each other. Kasi international sila pareho, global sila pareho eh. So ako, kasi ang premise ko, inuna niya na risk averse siya. Okay? So kung risk averse ka, siguro the max that you should be putting in these two funds will be 25%, 20% of your total portfolio kasi risk averse ka eh. Right? So, kailangan gawin mo yon, tapos tingnan mo kung ano yung mas mapupusuan mo dun sa dalawang fund. But the important thing is to allocate based on your risk appetite first, then you allocate on the two funds that will give you global exposure. Lercy, I don't know if I answered that correctly, but please feel free to put in your word on that one.
Yes, agree, Boss Rex. No, Boss Rex actually advocates asset allocation. So, in my personal opinion, then Kim, even if that client is conservative, no, there is really a place in her portfolio, no, for global funds, no. But there is really no, fixed percentage on how much of the portfolio should be allocated in global funds. Boss Rex is correct. If she is just starting, maybe she can allocate 10 to 20% of her portfolio, no, in Wave or Voyager, no. But what's important is really to inject, growth drivers like Wave and Voyager to the portfolio because of the larger investable universe, di ba? Sabi nga ni Jay kanina, no. Aside from it, there are also other benefits kasi you can gain exposure from different economies, no, and also you can gain access to other sectors, no, like I've mentioned in my presentation a while ago. So I hope that answers the question.
Definitely. Thank you, Ms. Lercy. And we have here a question for both Boss Rex and Jake. So when do you think we can better gauge the direction of the new administration to consider in our investment strategy? Nilagay niya pa 100 days. So I'm not sure who wants to answer first.
Well, I think the first hurdle is the appointment of the team. No, I'd look at the cabinet. I'd look at more particularly the economic team. And then from there, I will look at the real policy, governance policy, foreign policy, and economic policy. This will come out certainly on the inauguration. That would be, kasi syempre, during the campaign, we can deal with motherhoods that you cannot win elections because you have a clearer platform. People don't understand platforms. Pero pag nanalo ka na, kailangan klaruhin mo na yung platform mo. That's very important. So I guess by the middle of July, there would be a lot more clarity. And then tama siguro 100 days. Pero maraming information na lalabas by before June 30 and June 30 itself on the first day of office supposedly nung presumptive president pa lang. By tomorrow he will be president. Like by July 10 or July 15 kompleto na yung team niya siguro, so we'll have a better view of the future and how he is going to be managing it.
Thank you, boss. Jay?
I look not just on the Philippines kasi, so I have a more as an asset allocator, I look at different markets and tignan ko which one is attractive, which market is more attractive versus the other. In terms of your question on the trajectory of the Philippine economy, I'd agree with Mr. Boss Rex. Economic policy has still not been clear, and so the next few weeks, appointment of the cabinet, declaration of economic policy would be important. Although I would argue that fundamentals of the Philippine economy remain intact. You have your growing middle class. You have remittances still stable. You have your BPO sector. So you have growth engines. Of course, that goes. We still have a host of issues. We still have a bigger debt load now. We're a laggard in FDI, but taking it all into consideration, I'm still very constructive on the Philippine economy. The thing is, I think what the election has given this new administration is a clear mandate. And speaking to foreign fund managers, I think that's what's most important to them: a clean, honest, peaceful elections, and a clear mandate to the winners, so that he can implement whatever economic policy that he has um, he has set for the country, whether or not that would bring us to a higher growth trajectory or not, that remains to be seen. And of course, since we do not know that yet, I unfortunately I can't comment on that any further.
No worries. Thank you for that. And we have your last question for Miss Lercy and yeah, for Jake. So considering that Wave did very well last year, are we already buying at the bargain? And how much is estimated return po ng investing in?
Mhm. All right, I'll let Jake answer that question for our MSCI ACWI target.
Yeah. Actually, from a high of 750, just at the start of the year, the ACWI is now at around 620, and so our 12-month target from this point on is around 690. That imputes around 17 times price to earnings ratio, with an EPS growth of around 7%. So what that means is, from this level, we have an estimated upside of around 11%. But of course, if you entered at the start of the year, you'd still be down around 8%. So, but that target is again on a 12-month target. And so we think this, at these levels, these are the valuations are more reasonable. And kumbaga, you're buying at a sale. Think of it as buying at a sale, compared to the prices a year ago. And so if you ask me, it's a good time to enter. Is it a good time to enter with your entire portfolio? Probably not. So again, Lercy has mentioned, we go in at tranches. We look at the support levels. Kapag umabot ng support level, we put in. And then if it breaks that support level, we put in some more. So we do stagger, and then we do cost averaging. That way we manage our risk as well.
Thank you. Thank you for that, Jake. And actually, we have here one final last question. This one is for Boss Rex. No, na-request niya talaga na sa inyo ko, Boss, itanong. So if I invested in global market last 2020, is it still advisable to add investment at this time?
Yeah, as long as you have a growing portfolio, you have to have a growing proportion of that international and global market base. No? See, as we navigate this whole investment proposition, we always have to acknowledge the fact that, it's a small world now. I mean, for us to be invested just in the Philippines is going to be putting a lot of injustice in our portfolio and the way we manage money. It's a global landscape. It is a global arena for investing. Let us not waste those opportunities. We will have to be, first of all, a citizen of the world now, and we also have to be a global investor as such.
Thank you very much, Boss Rex. And with that, we would like to conclude our Q&A session. As much as we would still want to accommodate and answer all the other remaining questions, I'm afraid we might not have enough time for that anymore. So please just expect your business development officers to get in touch with you and help answer your inquiries. And so before
Kim, sorry, Kim.
Yes, Boss.
Sorry, Kim. Again, as I started my talk earlier, I'd want to end with this as well. I really have to thank, Jake and Lercy for being here with us. We are greatly honored and privileged to have SLAMCI and Sun Life as a partner. We look up to them, and in all aspects, this perspective on global investing is not going to be the same without the partnership of SLAMCI and Sun Life. And again, a very, very generous people in the person of Jake and Lercy to be with us not just this afternoon, but almost anytime we get to ask them to support us. Again, maraming salamat, Lercy and Jake. I hope hindi kayo madadala, and there might be a lot more in the future. Thank you. Thank you so much.
And thank you for that, Boss Rex. And before we close, may we get some final words or final message from our three speakers as well?
Okay, so sige, let me start. I would like to thank Ramper for inviting us, and also to all our attendees who spent their Tuesday afternoon with us. I hope you were able to find value, in all the things that we shared for this afternoon. So, sabi ni Kim, final word. So maybe with the current headwinds in the market, I'm sure a lot are scared. So let me just leave the quote from Warren Buffett, be fearful when others are greedy and greedy when others are fearful. So thank you again for inviting us.
Thank you, Lercy. Jake, you might want to.
Thank you, Ramper. Thank you for being a very, very gracious host and partner to us on Life. As the fund manager of the global fund suite of Sun Life, this year has been a challenge, but we continue to manage the funds entrusted to us to the best of our ability, protect your downside while maximizing the growth potential of your funds. To all of you guys who are looking to invest in the global funds, the opportunity to start, there's no better time to start but now. And there's just stay the course and stay diversified. There would be volatile periods, but as long as you are diversified, then at least you'd be able to weather the downside and the drawdowns that would be happening. So I look forward to talking to everyone again, and looking forward to sharing our expertise and how we manage our global funds. Thank you.
Thank you, Jake. And lastly, Bob.
For me, always go back to that line. Education without execution is mere entertainment. So sayang naman ang lahat ng natutunan nyo ngayon if we just, listened, participated, and not going to be able to do something about it. So please talk to your business development officers. Let's make things happen and put all these SLAMCI funds, these international and global funds, within your portfolios. Maraming salamat po.
Thank you again, Boss Rex. Thank you very much again to our dear speakers. And before we announce our raffle winners for today, may we again invite everyone to please subscribe to our YouTube channel and follow us on TikTok, Ram for Financials, and experience how we help people fulfill financial dreams. So you may scan the QR code flashed on your screens or simply click on the link available in our chat box. So right after this event, we hope you could do us a big favor by helping us answer a quick feedback form to continue enabling us organize quality events in the future. And lastly, para sa hinihintay ng madami, we will now announce our 5 lucky winners. So sino kayang mananalo sa ating mga ka-RFF today? So you can comment mine in the chat box if you think and if you feel na ikaw na ang mananalo. Ayan, may nagmamine na. So to win SLAMCI EGC voucher, we have here Lynn Moreno. Congratulations, Miss Lynn. And next we have Maria Elizabeth Santos. So congratulations, Miss Beth. And pangatlo po, we have Eileen Ravago. Congrats, Miss Eileen. And pang-apat, we have Liza Manlangit. Congratulations, Miss Lisa. And last but not the least, we have Ronaldo Gungon. Congratulations again to all our winners. And we do hope you learned a lot from this webinar. So with that, mga ka-RFF, this is Kim Sayo from Ram for Financials saying thank you very much, stay safe, and may God bless us all. Ingat, everyone!